your forex trading should be boring. Today's video, I'm going to talk about why and how social media often influences people into thinking trading should be really fun, exciting, big profits, staring at the screens all day, and everything like this. But that is the opposite of how forex trading actually works. Myself being a full-time forex trader, I trade, it's my full-time income. So I've definitely got the experience to talk about this topic. And I have a mentorship group. I have trader friends, everything like this. And I have been in the industry for years. So I've seen people, come and go, people on YouTube, people on different social media platforms, their lifestyle, and how it's quite easy to tell if someone is actually a trader just based off the content they post and everything like that. So before we start the video, I just want to say, if you're getting into trading for it to be fun, you've seen Wolf of Wall Street, you then think you're going to open a forex account with a random broker, probably not even going to be regulated. But if you think your life is actually going to end up like that, then you're going to be in for a rude awakening once you realize that forex trading is actually really boring if you're doing it correctly. Obviously, you can make money doing it the fun way, trading every hour of the day. And there are people that do that which make profit. Based on personal experiences, which is what I'm going to talk about in this video, I do think your trading should be boring. So if you are getting into trading for those reasons and you just want to have a bit of fun, you want that adrenaline rush of being in a trade, seeing the P&L go up and down, even if it's down, you get a bit of adrenaline inside your body, and it kind of makes you want to enter more trades. You want to see that profit. You want to see the green or the blue, depending on which platform you're actually using. That's always lovely when you're in a red trade or you've entered a trade and then that nice blue header pops up on the app and you see some nice profit. That is always the best, but you kind of got to eliminate that from your mind when you're actually trading. So we're going to talk about at the start of your journey. So when you're first starting trading, you're going to get this sort of excitement. You're going to want to enter trades. You're going to want to be in trades because that's what you've seen online. You've seen these people show up their MT4. They've got 10 grand profit, 20 grand profit, and they're loving life. They're on a yacht. They're on the beach. They're in their 10 million pound house. This is what we all want, obviously. But the reality of it is, once you actually start to develop a strategy, once you start going through the hours of putting in your time into backtesting, time into data collection, this isn't the exciting side. Obviously, the exciting side is the side where you're not actually sat down trading. You're not actually sat down risking your capital in the markets. But the people that actually keep with this sort of excitement throughout their whole trading journey, this is when it kind of encourages you to continue gambling. When you start trading, you don't have a strategy, you don't have a trading plan. You are essentially just gambling because you don't have anything to support the trades you're taking. When I first started trading, I was simply trading off of intuition. I didn't know whether price was going to go up or down. And obviously to this day, I still don't know. But if you have the tools in place, you have your own personal edge in the markets which you've tested, you kind of have a better idea, more of an idea when not to even enter a trade. Whereas when you're first starting, you might as well flip a coin. You probably have a higher chance of winning if you do that rather than just trading off your intuition and just end up losing in the long run. But the people that actually stick with this, and they might backtest a few trades, they might think they have a strategy, but if you don't have set in stone confluences, so if I don't see this, I don't enter the trade. If I don't see this, I don't enter the trade. But people still get their phone up, enter when they don't see their set confluences, which just baffles me still to this day. But each to their own. And if you have this gambler's mindset in your trading, it can be very, very dangerous. You might have 3-4 months of profitability, you're making good profit, you're averaging a good amount, but then you get that one trade, you get that 1 week of trading where, let's say you've had a few losing trades and you want to make that profit back. You want to cover those losses. Let's say you lose 3%, you then want to end that week on plus 2%. So then the next trade has to make 5%. And it can kind of put you into this awkward spiral where no matter what you make, even if you're limiting your losses to minus 1% instead of minus 3%, or even you're back at break even, you want to end that week in profit. So you just keep going and going and going until you're actually in profit. Whereas a wise trader would have a trade limit. So let's say they've lost 3 trades in a week. Their trade loss limit for that week was minus 3%. So then they're done. Even if the setups present themselves from their testing, they know that if they keep trading and based on their previous journaling results, that's the most powerful thing you can actually do. Okay, last time I lost 3 trades in a row, what did I do? How did I react? How did I bounce back from this exact scenario in the past? And once they've done that, they can then say, okay, last time I took 3 trades in a row, I just waited till the next week. You had a weekend to rest, to clear your mind and get ready for a fresh week. And then you start trading again normally. Very, very nice thing to do. And then once you get to the stage where you have your journal set out perfectly, so every single trade, every single session you're actually trading, you're then writing down what happened, what were you feeling during the session, what actually was the outcome, did you enter any trades, did you get any missed entries? So I used to get it a lot where trades would come within, like, my entry was here, my limit was levels here and price would come down and just miss my limit. And this was very, very frustrating. But the journal I actually use has a section for missed trades. So you put all your missed trades in there, and once you look back, let's say on a weekend or a week where you're not trading, or you've had a few slow days in the markets, you can look back on this sort of data. And I began to realize that I was trying to get crazy entries. So entries where I could minimize my stop loss and let's say get it to 5 pips, 6 pips, when in my back testing I was usually getting like 9-10 pip stop losses. So I was trying to get a higher risk to reward, just trying to push for that every single time. But then I look back at my back testing results and I was like, my average stop loss size is 10 pips anyway, so why am I trying to force these tight entries? So what I did was, instead of just having random entries, random stop loss sizes, I just implemented a 10 pip stop loss rule in my trading, and then I hardly ever have missed entries currently. Obviously you are going to get certain trades which do miss, and this is just part of trading. Not every single setup is going to hit, not every single setup is going to work, but I now know that my execution rate has actually gone up. I'm entering more trades, and obviously because my strategy was working, the trades were going to the take profit, but it was just missing my entry. Obviously my profitability and my profit over the long term has actually gone up as a result of this. But I do think the most boring part about trading is actually the waiting. So personally, I trade the 15-minute time frame. So when I'm actually in a trade, it's not really boring, so to speak, but the actual waiting for a setup can be very, very boring. Simply put, it is quite boring. And if you don't have anything else to do, hobbies wise, you could play tennis. I love tennis, getting into golf now as well. These sort of things, they can kind of split up your day. So let's say in the morning, like personally, I trade London sessions. So from around 7:30 to 12:30, I'm actually looking for setup. If I don't see a setup by 10:11, there's not usually going to be a setup within the next couple of hours during London session. So I simply just close my screens, close MT4, close TradingView, and just wait till the next day to see if there's any potential setups for the next day. And the good thing about this is your trading is then done for the day by 1 o'clock. So before lunchtime, before the day has even passed halfway, I'm done for the day work-wise for trading. The rest of the day you can then spend either doing activities, you could go launch other businesses. A lot of people that I actually know from trading, and what I do personally is I'll use my trading profit to then invest into other businesses, to launch other businesses, focus on investments. How am I going to grow my income? Which then, so income not from trading grows, it will also mean that pretty much your trading performance will increase with that. So the more money you make outside of trading, the less pressure is actually put on your performance to actually make profit every month, to reach a certain amount of monetary profit, which, if you're trying to focus and push for that, then it can be quite detrimental. A lot of people actually fail these prop firm challenges. They could be fully profitable traders making consistent profits every single month because they don't have to hit a certain limit or a certain profit target. Whereas as soon as they're put in a situation where they have to make 10% in 30 days, they have to abide to certain drawdown rules, they can't trade certain hours of the day due to restricted news events. All of this can be putting pressure onto your trading. So if you're actually having trading as your sole income, this is another thing which can lead to less profit in the long term. Whereas if you've got other income, let's say myself personally, just naming one, for example, this YouTube channel. If I wanted to, I could live solely off of this YouTube channel. So everything else is technically just added on extra. Trading obviously is a big portion of that income. In June, from prop firms alone, from one prop firm account, I made $42,000, which is very, very nice. And there's actually videos on the channel coming soon with the live trading for those exact trades, start to finish, entry management, exits, everything like that. So you guys will love that. But with my trading, once it's gone past 10, 11 o'clock, I'm then out, simply not on the charts. The simple reason for this is I don't want to be chasing trades. Even though it's not in my trading session, people can get encouraged to enter trades, which they wouldn't normally take. People obviously have plans, they have reasons for entries, they have a strict list which they actually need to see to enter a trade. But if, let's say I'm recording this video now, I have the charts up over here. I don't actually have the charts up, but for example, let's say I do, and I'm like, okay, GBP USD, it kind of looks like a decent setup. It's not in my plan, but I can't miss out on this trade. That's what people's mindset's like. Some people that are watching this video will be like, that's not possible. How do people actually think like that? But remember the statistic, 90% of traders actually lose their money. So it's a very, very high probability that a lot of people are actually thinking like that, trading out of their session, trading out of their plan. Whereas if you're not actually on the charts, you're outdoors, you don't have signal, you don't have access to your computer, your trading accounts, this can actually limit any exposure to the markets to potentially enter setups which aren't in your plan. Personally, what I do is I only actually have my MT4 login for my funded accounts on one of my phones. So I have a phone which I pretty much only leave in my office, and I have a phone, my personal phone, which doesn't actually have to log in to that funded account. I also have it logged in on my computer because when I'm trading, I'm always in this room on my computer. So if I'm out of the house and I'm on my phone, I can't be tempted to enter trades because I don't even have to log in to enter the trades on those accounts. So it completely limits my trading outside of this room. And the main benefit of actually spending less time on the charts is you can utilize alerts to basically watch the markets for you. So let's say I wake up, it's around 7:30, I'm getting onto the charts ready for London session, and I go on my computer, I sit down, open TradingView, open GBP USD chart, and there's a potential area for a sell. Let's say we're looking for a short position. So if price is not currently pretty much at my entry within 5-10 pips, I will just set an alert. TradingView has this nice alert feature, and I'll just set an alert, a few pips below my entry or a few pips above if you're looking for long. And main reason for this is I want to know when that trade is actually hitting that area. Oftentimes trades will either miss the area or they'll come back 2-3 hours later to give you your entry. I don't want to be sat looking at the chart, staring, waiting for 2 or 3 hours. I could be doing something else. I could be focusing on anything else, around the house or with other businesses. So I'm just going to set that alert, and then on your phone, I think you can set it up for an email as well. It makes a loud noise on your computer or in your headphones with the TradingView alerts. I then know, okay, price is in my entry area. I then go and enter the trade if it is still valid. But it kind of limits your exposure to the charts in that way also. And the best traders I've actually seen don't really trade that often. Myself personally, in the last 2 weeks, I've only taken about 3 trades, and they were within a 2-day period. So I had 2 days where I actually traded, and then I've just simply not traded for the last 2 weeks. Obviously there could have been potential setups, but I reached a profit target which I actually wanted to make, and I was just simply done for the week, or done for the month, so to speak. But now this week we're going to start trading again. Once we get the new funded account details, we'll be back on the charts to make some nice profit. But you definitely won't see me sat here 5 hours a day, 10 hours a day, just sat at the charts waiting for a setup. I'll be doing something else. I'll be at the golf range, I'll be at the golf course, at the tennis courts, pretty much doing anything else other than just burning my eyes staring at the screen. I see a lot of traders, they get into trading to actually live a trader lifestyle, but then they're just sat at the screens all day looking for a potential setup, but you're kind of just doing a normal job. And a lot of these traders are making less than what they were making or what they could make in a normal job anyway. So you're actually working more hours for less income. Whereas if you did your trading on the side, you could potentially make more money because you're not forcing setups, you're not chasing setups, you're not mismanaging your trades, and you can just set, forget, and the rest is history. So definitely evaluate if you are spending too much time on the charts, and maybe limit your chart time to a certain window where you actually find your entries are most common and most frequent. So if you guys did enjoy it, I'll catch you guys in the next one, and I'll see you guys later.